Are you ready to take your investment game to the next level? Introducing Digital Investor, your ultimate guide to mastering the digital marketplace. Whether you're a seasoned pro or just starting out, Digital Investor brings you cutting-edge game theoretical strategies, expert insights, and real-time tips and tactics to analyze, evaluate, invest and grow your wealth. Don't miss out on the digital revolution. Visit www.nickblacknex.com and start your journey with Digital Investor today.
All right, let's get to it. Holy crap, Howard's on time. We should stop. We should stop an hour early. Since Howard made it, we should stop an hour early. Okay, so let me get back to here. Let's go over the Jerome situation. But I don't, before we get into it, Jerome Powell didn't crash markets. A bunch of people that don't understand what they're doing crashed markets. First, there's a lot of people that believe that lowering the Fed funds rate is a form of easing. Does anybody here believe that? Let's go ahead and tackle these. Let's tackle these issues as they come up. Does anybody believe that cutting rates, that the overnight lending rate for Fed funds that applies to a very small handful of financial institutions at all, does anybody think that is tantamount to easing monetary conditions in any way? Does anybody think it has any effect in the greater marketplace? Anybody? You guys are the minority. You're the minority. There are people right now that run money, hedge fund managers, people with a lot of money, well, managing a lot of money, that believe that moving the lending rate, the overnight short-term lending rate, creates loose monetary conditions. Well, no, this is why the markets crashed. They think it does, but it doesn't. Thinking that the Fed is doing something that does something doesn't make that thing happen. You have to convince all of the banks to start lending, and banks ain't lending. And no, see, that's wrong. You're right, but you're wrong. People don't behave in this way, because remember, when the Fed's moving around that rate, they're doing a couple things. One, they're signaling to the world, hey, we're doing something. We're doing something about this. People, yes, Donna, people want to hear that they're doing something. But people aren't the one lending into the economy. Who lends into the economy? Who do you think the real central bank actually is? It's not the Fed. The Fed's not a money dealer. It's the banks. And banks aren't lending. They don't give a shit what the Fed says. And so if banks stop, banks are the intermediary, the first and last intermediary. Yep. regionals, provincial, all banks, but yes, regionals especially. And so when banks quit lending, it doesn't matter what the Fed says, and it doesn't matter what people think either. But the reaction function of people. So here's where you're right. Here's where people being idiots is dummies is quite accurate, and that's that I'll go through it, but a bunch of markets got absolutely obliterated at this incredibly shocking news that the Fed, and remember, this is the same Fed that last January, February, March, April, May, this is the same Fed that said higher for longer. You guys remember that? It wasn't until late summer that the reverse course started kicking, that the idea of a reverse course. Then it was the 50, the 25, the 25. Remember that. In the beginning of the summer, this year that we're in, every single board member, all the board of governors and the Fed, every economist agree, higher for longer. And then one meeting later, remember they missed the July meeting where they probably should have cut. That was the whole thing, right? Higher for longer. And then July came. Oh shit. Then August, the skip. Then you go to September, the cut. Everybody was higher for longer until they weren't. So these same idiots, these backwards facing, these people that are reading, they're like reading your chat history from 6 months ago, and they're going to come give you life coaching. Oh, give me your messages from 6 months ago. What? I'm not even dating that person. That's what we need. We need your data from 6 months ago. Okay, what about my data from right now? That's not important to us. We need the older stuff. We need the really old stuff. And also, how many text messages do you get a day? Oh, maybe I get 10. No, because 1 month you had 7 and 1 month you had 40. So we're going to smooth that at 27. But I don't get 20. I don't get 27. Nope. 27 is the number. We're going to do some smoothing. What does that even mean? We just smooth it. We're just going to make a smooth line. But life is not a smooth line. Shh. Hush now. With the Fed. So you got to remember, this is a group that they got it so wrong that they did a complete reverse, a 180. Someone said they did a 360. No, they didn't do a 360. That'd be going the same direction. They did a 180 within 1 month of data. Do you expect these idiots to be able to imagine what might happen next month, let alone next 6 months, next year, next 2 years? No effing chance. Because they just take the data, and the second it comes in 6 months late or 3 months late, they try to backwards engineer some behavior. Then when and smooth data too, because when the revisions come in, you don't see the Fed revise their behavior, do you? Right? Like the way the Fed works is they're flying a plane into the mountain, and then they get news, hey, the mountain, that's not actually a mountain. That's just a giant wall. You can't go around it. And they're like, okay. So they just keep going straight. Like, but aren't you going to revise your plan based on the new information? Because we got that last month. Yes, but we're giving you new information that little mountain that you're going to swerve around, it's just a fucking wall. You're going to hit it. Yeah, nope. We're good. Okay, Fed. So anyway, that's who you're dealing with. Now, there may be some people left in the investment community, and that's why markets shit the bed, because the investment community, they panicked because they do, like you said, Donna, they do because they don't understand, basic fucking math. They don't understand that rate cuts don't do anything in society? Nothing. It's a signaling mechanism. It eventually may have some weird correlation to lending rates, kind of. But remember, banks are for-profit businesses and they do what's best for them. And if they don't see a lending environment that's fertile and safe, if they don't think they're going to get their money back, they clutch their pearls. They hold on to cash, they stockpile cash, and they stockpile collateral. They just hide in the bond market. When you see people hiding in the bond market, that should tell you something. That should be a big signal. They'd rather hide in the, what they consider safe and liquid assets, a somewhat controlled environment, rather than lending into society where they could make many multiples more. When they're not willing to do that, as they step back from that intermediary role, that intermediary function, shit comes grinding to a halt. That's just how it is. Then separate that from the stock market, which the financialized economy, that small group of participants that have money in these investment assets, stocks. And that is disconnected from reality and disconnected from, the rest of the world. And so you have a bunch of different kind of dummies at play. You have the dummies at the Fed prognosticating and with their political theater, and they're always late to the party, very poignant bullshit. And I'm not actually, what Powell said was, he kind of admitted they don't know, which, good on him. So I'm going to go through just some of the kind of highlights, but this isn't, a lot of people are like, I can't believe Powell did this. Powell didn't do anything but say they don't have a fucking clue. And guess what? They don't. But he kind of admitted it. So kind of good on Powell. And all these idiots that think that somehow this lending rate is free money. Somehow the Fed funds rate's free money. It's not ever, you can't get anyone, the argument would be, oh, well, because they lowered the rate and therefore the banks are going to go out, they're going to lend more money. That's not what happens. That's not what's ever happened. Ever. I mean, like ever. It's the lending rate has never got, because what happens is what? When rates get too low, a couple of things. One, banks can't make any money on loans. So what's the, it's so ridiculous. Anyway, the idea is that banks would be forced to go out and do all sorts of more exotic type lending, entrepreneurial lending, things like that. It just doesn't work that way, because banks, they look at the Fed. I don't know what banks think about the Fed. I would hope they look at them as a bunch of idiots, but my guess is they don't. But my guess is they believe in the Fed. And when the Fed is lowering rates, it's because the Fed's clutching their pearls and they're scared and they're clueless. The economy's bad. We're going to lower rates. So they lower rates. The banks go, oh shit, it is bad. They clutch their pearls. Don't put any money out the door. We're liable to never get that back. Let's just wait. We'll get paid our paltry sum in the treasury market. Well, it's not whether they should have or shouldn't have. It doesn't make a difference. It makes no difference what they do. This is the thing. It makes no difference. But the idiots that believe it does make a difference, they panicked like a mother. So let's go through it. Basically, Powell said the Fed will only cut rates twice. Again, he didn't say that. What he did is there was adjustments to the dot plot, which, by the way, is the worst thing. It's the most embarrassing thing for them because it's never been right. They always readjust it. Every single month, the dot plot changes. This time next month, it will change again. If anything happens, if a bank crashes, if this, if that, the whole thing will change. Oh, well, 4 rate cuts. Oh, 8 rate cuts. Oh, listen, this is a race to zero. You know another thing? They have to get rates down. Why? Because the government can't service its debt. 35 trillion and counting, closing in on 36 trillion and counting. You know what the debt service on that is? It's a lot. so much. It's like a lot. Powell said the Fed would only cut rates twice 2025, and the markets panicked big time. Stocks tanked, bonds crashed, and Bitcoin literally shit the bed after traders got blindsided. I don't know what the numbers are. We'll look at that tomorrow as far as how many people got nuked on leverage. But it was some leverage, and mostly I think people in the crypto space were looking at other markets crashing, and they're like, well, if those are crashing, this is going to crash. And so it kind of created like a second tier crash. I don't think yet. Well, we would see. We'll see what the behavior in the ETFs were. If there's a big outflow yesterday, a panic outflow in the ETFs, which would cause those ETFs to push tokens back to the OTC brokers and sell and things like that. We'll see if that's what happened. I don't so much think that's what happened. This was a general panic. This is just a good general panic with some leverage unwinding in it. Global currencies like the euro and the rupee dropped hard, while risky tech stocks fell off a cliff. Well, a lot of these are stocks that were an all-time high. A lot of it is part of the Trump trade cooling down. It will probably heat back up as we approach Inauguration Day on the 20th. I think probably from like the 17th to the 20th, you could see a lot of good excitement somewhere in there, depending on where the weekends fall. Federal Reserve Chair Jerome Powell shook financial markets this week, delivering a reality check that left traders scrambling. On Wednesday, Powell laid out a cautious approach to interest rate cuts for 2025. Again, these are the same guys that said higher for longer, all the way up until June. Higher for longer. We're raising rates. Higher for longer. Okay, stocks nosedive 3%. Bonds crumbled. The 10-year Treasury yields soared to their highest in 7 months. That's all just panic selling and scrambling for and just kind of. You remember when yields are going up, that is because the price of bonds is crashing. So those two things happen at the same time. So when they go bonds crumbled and 10-year Treasury yields soared, they're saying the same thing. That necessarily happens because they're inversely correlated. So as the price of a bond goes down, its yield goes up. Everybody understands why that is, right? Like, in a simple way to think about it is, if someone says, hey, would you like this government bond for 4%? You're like, no. Oh, well, what about what if we paid you 4.25? No. 4.5? Maybe. 4.7. I'll take it. Right? But the price of the bond deteriorates. The price of the bond goes down as the yield goes up. And then when a bunch of people are scrambling for collateral and scrambling into the treasuries and bills, notes, and bonds. Remember, bonds are at the further end, like out in the many years, 10 plus. You have bills and notes, bills at the short end, notes in the middle, bills, notes, bonds. So when you hear bonds crumbled, sometimes people use bonds as an omnibus term for all government debt, but it really is bills, notes, bonds. Bonds are the further out. So when you hear the 10-year yields soared to their highest in 7 months, which is still tiny. The sell-off was brutal. The worst. Now, this part's true. The worst post-meeting market reaction since the pandemic. And I would bet you that Jerome Powell is feeling smug about that. I bet in a weird, perverse way, he's kind of happy because it's like for the last couple of years, no one really gives a shit what he has to say. And even if this is a crash, in a way, he kind of feels self-important. Like, people do give a shit. I matter. And like, yeah, I mean, because no one else is talking, buddy. So yes, to a bunch of idiots, you matter. Investors drunk on years. This is a little bit drunk on rate cuts and easy money. That's not true. Didn't take the news well. Powell's message was simple. The Fed is inconclusive. They are unsure. After 3 consecutive rate cuts, officials now project just 2 more reductions in the next 12 months, unless the information changes next month, which it does every month. For traders betting on a steady flow of policy easing to prop up asset prices, again, that is bullshit. So sometimes you have to call out the bullshit in the article you're reading. This person that wrote this article doesn't understand even how rate cuts work, apparently. Officials now project just 2 more reductions in the next 12 months, in parentheses, until they get next month's information and completely change everything, just like they always do every month. So again, this is all siloed, but it's like they make these big extrapolations. Bernanke's thing is the dot plot. And every single month when they reevaluate, and every other month when they evaluate the dot plot, it's changing every time. It's so funny. Uncertainty with house stalling on passing CR, adding to downward pressure. I don't know. I don't think it's that. I don't think that's the uncertainty that's panicking people. Powell's neutral stance rattles markets. Look, in this, Powell is correct. He kind of said, we don't know. They don't know. They've never known. They'll never know. They can't even take the data and divine the obvious from it when it's 6 months old. These guys aren't even smart enough, apparently, to just go to Reddit. Anyway, Powell's caution wasn't entirely unexpected. Economic data has been painting a mixed picture. Inflation slightly sticky, remaining above the Fed's 2% target. And again, this is a target they pulled out of their ass. Started by central banks a long time ago. This 2-3-4 policy, it's central banking 101. It's like 2% inflation, 3% GDP growth, 4% unemployment. I'm a central banker. Let's do everything in our power to keep those numbers in play. Okay. What about your monetary tools? No. That's when we have a crash. That's when the markets don't respect these numbers. Okay, whatever. So the U.S. economy has proven surprisingly resilient, I think, compared to other economies. That's a fair extrapolation. Traders had already started pricing in higher yields, pushing the 10-year Treasury up by 75 basis points since September. Even seasoned market participants were caught off guard by how close the Fed appears to slowing its rate cutting cycle. Again, some people are saying, "Oh, that's the end of the cycle." No, this is a race downward. It is a continual and perpetual race downward. They will do what all the other banks do. They will mostly do what Canada does. This will not change. So they can say what they want and they can posture how they want. I guess it sets up a big boom at the next meeting when they go, "Oh well, the conditions have gotten worse. We've decided we're gonna cut again, and but only a few more times this year. Maybe only one more." Okay, Jerome, but you still cut, didn't you? Because that's all you can do. Because that's all you know. Notice that if this was such a big deal, if they were so sure that they didn't need to cut, they wouldn't have cut. That's the whole thing. Like, I don't need another beer. I'm just going to drink one for the road. But I don't need it. I don't even need it. I can quit anytime. But give it to me. I'm very thirsty. But it could be anything as long as it's beer. Like, come on, man. So markets adjusted quickly and rather violently. The swaps market now expects fewer than 2 quarter-point cuts in 2025. I would say the swap market is a bunch of fools. Some traders, like the secured overnight finance, the SOFR rate options market, are betting that the Fed reverses course and starts hiking rates. Those people are fucking fools. But a lot of that is hedging behavior. So the other thing too is when you look at these markets that are around SOFR and markets that are like swaps markets, a lot of times what you see is the aggregate hedging behavior. You're not actually seeing what their bets are. You're seeing what their hedging bets are. So like, hey, listen, I am 90% certain this is going to happen, but I'm going to put some cash over here just in case I am wrong. And, when you run money or, you should do some hedging. You should assume that things won't always go up and to the right. So, yeah. Okay. And then the wild card, President-elect Donald Trump, just weeks before he re-enters the White House, has promised aggressive economic policies. There's a general belief right now that these higher tariffs, this idea of higher tariffs and tax cuts, make, again, economists start to warn that it could stoke the fires of inflation. Powell's cautionary statement makes sense in this context because he doesn't know what the beginning of the Trump presidency is going to look like. He doesn't know what the last 8 years actually look like. Again, this is a backwards-facing organization that doesn't even know what they're looking at. They're using the wrong core information to make their assumptions. All of their assumptions are going to be flawed because they use a flawed bedrock, right? They're using flawed math and flawed logic. It's flawed logic. So they're never going to get it right, but sometimes they'll accidentally, like two ships crossing in the night, they'll accidentally cross something that looks correct. Like a rate will go one way and they'll be going the other way. And for a millisecond, they'll be like, we did it. We did it. So Jerome and the other, the nerdery of 1960s educated economists and fools are cautious because they don't know what's going on. And it's kind of obvious. That's what I got out of his statement. There's kind of like, and be honest, all of us right now are kind of, we're cautiously optimistic, but no one knows exactly what day 1 through day 100 are going to look like under the new Trump presidency. We're just excited about it. I mean, we're excited about it because we're in the crypto space and we know it's going to be generally good. But the rest of the markets, they don't know exactly. They're excited, they're optimistic, but they don't know. Maybe the enthusiasm got ahead of them. They got ahead of their skis. And so this sell-off makes sense. It makes sense. To me, it makes sense. Global markets feel the heat. The euro, the pound, the Swiss franc each dropped over 1%, while the offshore Chinese yuan, the renminbi, hit its lowest point since 2023. It's been going down anyway. Emerging markets didn't escape the carnage either. The Indian rupee plunged past 85 per dollar, setting a new record low. India's got problems that have nothing to do with Jerome's statement or, overnight lending rates. The yield on India's 10-year bond climbed to 6.78%, and the NSE Nifty 50 index fell 60 basis points. A combination of weak regional currencies, capital outflows, and ballooning trade deficit added pressure on the rupee. Meanwhile, in the riskier corners of Wall Street, which had thrived on rate cut optimism and people being excited about Trump's growth policies, got hammered. Goldman Sachs index of the most shorted stocks dropped nearly 5%. Its worst day since February. And again, think of the mindset in February: higher for longer, the chokehold of inflation, all the bullshit. A basket tracking profitless tech firms slid 6.4%, the sharpest fall in 2 years. Tesla shares tanked 8.3%. That's a big hit. That's a big hit. God, I don't even want to think about what Elon on paper lost, but can you imagine having a day? I mean, we all have days where we lose a little money. Like I'll tell you, for those of you that are feeling sad or maybe licking your wounds, let me see, where am I at? I think yesterday was an ouchie. I had an ouchie. It wasn't too bad. I'm down 1.37. Let's call it 1.4 million in a day. I mean, down. It's silly. It's on paper, but I don't complain when I'm up either. So yeah, that's just kind of part of it. That's kind of how it works at the rodeo. Sometimes you get kicked right in the dick by a horse or a bull. And that's what rodeo is. And so you can't really hang on these day-to-day things. it is interesting to watch people panic. And it is interesting to watch the ways people panic. This wasn't like an enthusiasm leverage unwind, at least not in the crypto space. I don't think near the amount of leverage got whacked as it did 2 weeks ago, but prices fell far lower than they did 2 weeks ago. But a lot of the leverage in crypto was unwound, in that kind of beginning last week thing that happened, that kind of went Sunday to kind of late Tuesday, Wednesday. Remember that supreme kick in the newts? That unwound over 2 billion in stupid crypto leverage. I don't think that much leverage got whacked. It's just prices came way down. And you know what? Prices should come down on a lot of stuff. There was a lot of bullshit, sentimental premium in a lot of these things. A lot of the stuff that tanked should have tanked because it's garbage. So these kinds of clean outs are good. I was hoping that this would all be gobbled up by last week's pummeling, and it would set up a nice little rally into Christmas, which we still might get. We're looking at the 19th. We're 6 days away. I would be surprised if we didn't get a kind of a rally into Christmas. We'll see. But anyway, Tesla shares tanked 8.3%. Bitcoin was right at the all-time high. I mean, just hours prior, it had been at the all-time high, and then it S the bed about over 5%. Of course, Ethereum got nuked. People panicked. Cats and dogs living together, and so they're calling this is a hawkish pivot. Hawkish. No, hawks. This whole thing, hawkish is raising rates. Dovish is cutting rates. Saying we don't know what's going to happen, and we foresee 2 more rate cuts. Okay? Means nothing. It means they are still dovish, and they still don't have any idea what's happening next year. So if you thought you were going to look to the Fed for some kind of insight, the only insight is that they are lost, man. They are floating down a river on an inner tube, and they're just like, they got the beer koozie on, and they're like, whatever happens, whatever. Hey, you're about to go off a cliff. I don't care about that. Show me where I was 6 months ago. That's how I'm going to steer this thing. Like, no, you're about to go off a cliff. Like right now, in your little floaty, you're going to go off a cliff. I don't care about that. I want to know what happened 6 months ago. All right. Good luck, Fed. So, despite all of the hawkishness, wink, wink, the Fed cut rates a quarter point, bringing the range average from 4.25 to 4.5%, which should have given some people a relief, but it was generally assumed this was going to happen. Powell's dot plot, which is we talked about that earlier, which shows policymakers' expectations, forecasts just 2 rate cuts in 2025. Again, the same dot plot that was up until June had raises and hikes all throughout the year. You realize that, right? Yeah, I got to put a fine point on this. Anyway, there were back in September, again, when they did the first cut in September, in panic September, they had predicted 4 cuts of a quarter point this year. Here we go. We get into the indeterminate. Remember, this is pre-election, Trump enthusiasm, all the. So fast forward October, November, December, and a clueless Fed. Of course, they don't know what's going to happen next year, and of course, they're less panicky than they were in September, when every number they looked at completely shit the bed. Now you just have to wait for readjustments to jobs. And also, you'd like to think that they understand how this unemployment data is so sketch. It's so sketchy. Like if you're looking for a job and you're unemployed, but you can't find a job, at a certain point, they mark you as not unemployed. You don't have a job, but you've just left the workforce. because you can't find one in a certain amount of time, you've left the workforce. You're like, but I don't have a job. You don't. Shush, hush now. But I don't have a job. I'm home. No, I'm housing insecure. I'm job insecure. Yes, but you're not jobless, so you don't count. You're not part of the number, Francois. Ah, shit. What am I? You do not exist on our documents, on our Excel spreadsheet. You're gone. What? So these are the numbers they use. Anyway, so policymakers rate expectations, forecast 2 cuts, down from the 4 predicted during their panic. Investors appear wary of stubborn inflation, but it looks like there is consistent economic and solid economic growth in the United States. I don't personally agree with that. I think things are much worse than people are letting on. I think if you look at hiring, it's awful. If you just look at firing, like firing is very normal. Firing and rehiring, that's a cycle. The problem is when you get firing and not rehiring. So people are looking at, oh, it's all about the jobless claims. It's partly about that. It's partly about no one's fucking hiring. That's what it's partly. I mean, that's the big part. And there's not a big enough focus on that. I feel like that gets missed quite a bit. And that kind of information is, you can divine it from the household survey. You kind of got to look at a lot of these things and kind of sit back. I think that's another problem with the Fed is that they're very rigid in that they look at a very few data pieces, and the ones that don't agree with what they say, they just kick them out. The 210, the near-term forward, they used to look at that. They don't look at it anymore because it disagreed with their prognostication, so they just quit looking at it. The actual real jobs data, they don't really look at that. When the jobs data gets reevaluated downward, when it gets adjusted to what the real numbers are, when they get past the bullshit smoothing, then they just kind of ignore it. Like, yes, but this is what really happened. We don't care. We've made our decision. But you made your decision on bad information. No, we made our decision on jobs numbers. Yes, and they've been revised down. We don't care. What are the next ones? The next ones will get revised down. We don't care. We take the number we get. We make a decision. We stick with it. But those aren't the real numbers. We don't care. All right. Okay. So stocks reacted pretty bad. The Dow Jones, although the Dow is up, everything's actually up. I was looking at CNBC just before we started, and let's see. Bitcoin's over 100K. So it's weird. Bitcoin's down 2%, but it would look like the end of the world has come. When I was on CNBC, it looked like markets were doing pretty good. They had the Dow's up 290, almost 300. S&P's up 46 points. NASDAQ's up almost 200. So that tells you about how much give a shit people have. There's a lot of panic at the moment, and people start and they start reacting, and reacting creates more reacting, and then leverage unwinds. And at a certain point, people go, wait. What is the Fed saying? They're saying they're clueless. Okay, we know that. They're saying they don't really have any tools. Okay, we know that. And they're saying they don't really know what's going to happen next year. I would agree with that. They don't know what's going to happen next year. So in this case, and no, James, we're not going to do enough on Powell's madness because you need to understand how the fucking market works. It's not enough to just listen to Powell and pivot off of that. You need to know how the gears work, buddy. Come on, James, you're a deputy. You should know better. God, the opportunity, James, deputy, is that you will outsmart your peers because you know how the gears work. That's the key, man. Don't you guys get it? Don't you see the teachable, repeatable skill set? It's knowing that these people are fools. Once you know that, Then you got to know why they're fools and how they are fools. And when they look at a watch with gears in it, what they think's happening, and when you look at that same watch and you know what the gears do, what you know is happening. There's a big difference. I know people that run a lot of money that don't have a fucking clue. They are probably, and those were part of the people that panicked yesterday, is my guess. Do you think the rate cut percentages will be an overcorrection? No, it's not an overcorrection or a correction. It doesn't matter. None of it matters because the adjustments in interest rates by central banks are a reaction function. They don't make the economy do this or that. They are a reaction to the economy doing this or that. This is a major point. Matter of fact, this is probably the only thing. If this is all you get out of today. When central banks adjust interest rates, it's not forward-looking. It's a reaction function. They're reacting to data, most of it at the closest 3 months old, but usually 3 to 6 months old data. It's a reaction. They don't make economies do things. They react to economies doing things because someone has to react to economies doing things, at least publicly. So someone needs someone to step up and say, we get it. We're here. We're paying attention when you're asleep. We know what's going on. Yeah, that Kiril's got it. It's always backwards facing. Always, always, always. This is really important because then you start to understand when the bond market, things happen in the bond market, which is mostly hedging behavior, right? Then you see where people are placing their bets. Then you can work it backwards. That's the key. Yeah. I think overreaction is a good term. Reaction, yes. Correction, no, because there's nothing to correct. There's nothing to uncorrect. I don't think. Okay, I think rate cutting is going to continue. And nothing's in a straight line, right? Like they may pause here, whatever. But I think rate cutting will continue because the U.S. government cannot service its debt. Can't be done. Cannot. And it certainly can't service it here because you can't roll anything over, right? Like you can't roll over debt that was X amount for debt that costs more. Remember, like we talked about this Tuesday, we talked about like fiscal stimulus funding mechanisms where the government would do it, right? There's monetary stimulus and funding measures that the Fed could take. The Fed's two tools are, well, unless they make some up, are the ability to quantitatively ease, which there's nothing quantitative about it, which is using bank reserves to go into markets and to deal with money dealers and to basically hoover up quality collateral and fuck the markets. There's a very good argument that monetary tool is the reverse, in that when you go and purchase quality collateral, when you make banks give you their quality collateral and you give them an illiquid bank reserve, that you're actually doing the opposite of easing. When the bank is swapping bank reserves with an entity, like so the Fed is taking good quality collateral that you can use for a variety of things as a bank. You can go into repo, you can do all this cool shit. When they are strip mining you and strip mining the market of quality collateral, it creates a lack of collateral. Does a lack of collateral in money markets sound like a good thing or a bad thing? Does a lack of collateral in money markets that function off collateral, does that sound like a way to ease conditions? If you strip mine all of the good collateral, does that sound like an easing function? Does it sound quantitative? Or does it sound like a weird, sloppy ass? And not only that, it's not just that you're hoovering up quality collateral. It's that you're hoovering up quality collateral and giving in its place a monopoly money coupon that has no fucking use. You can't do anything with bank reserves. They're so limited in functionality. You can't turn them into cash unless you can find some other dumber asshole to take them. And they're like, I don't want your fucking shitty bank reserves. I'm keeping my collateral, bro. I'm going into repo. I'm doing shit. I'm making things happen. So that part of the monetary tool chest is a joke because they don't use real money. They're not a money dealer. That was the whole thing yesterday where everybody's like, oh, Jerome Powell said they're not going to hold. This was the other part. Jerome Powell said, we're not entertaining holding Bitcoin. They can't legally hold Bitcoin. They can't hold anything. They're not a money dealer. They can't. The Federal Reserve doesn't hold gold either. They don't do that. They can't do that. It would take Congress to go and do. I mean, it's just asinine. Anyway, but everybody took that as like, oh, it's a negative crypto sentiment. And Jerome Powell said correctly, no, that would take Congress to give us those powers. We don't do that. They don't do that. They can't do that legally. It wasn't Jerome dick moving crypto. He doesn't give a shit, dude. You guys know he's rich. He's probably rich off of sketchy ass insider trading like the rest of those sons of bitches. But it doesn't matter. He's rich. Do you think his coffee was any worse today because markets are up or down or sideways? He doesn't give a shit. I think the dude's worth like $55 million, right? Something like that. 55, 45 million bucks. Do you think he gets, do you think if anybody here woke up and you had just just $45 million in your bank account, do you think you would give two fucking shits what the markets are doing? Do you care at all? No. Commercial real estate, they get whacked. Commercial real estate, listen, that's a problem. That's a big problem. Anyway, rates will trend downward because the servicing of debt is difficult. The idea would be that as rates go down, banks step up and increase lending. Right? There's less to be made hiding in government debt. Therefore, I'm going to go out and animal spirits will prevail. And that's just not happening. That's the problem. It's the chasm. It's the gap in time. So the business cycle needs to propel that, to prop that. It doesn't matter what the Fed does if the business cycle doesn't do it. The entrepreneurs, the participants in markets, the people building businesses, things like that, until they start entrepreneuring and that business cycle folds over to the point where we're starting to lift from that kind of recessionary area or kind of quagmatic, slow, grinding, pervasive, kind of depression-y type, silent depression, I think Emil calls it, like this kind of quiet depression we're stuck in that you can't paper over with funny money and bluster, right? So can banknotes be used in very limited? Not really. Not really. There's a bunch of rules. Like it's a mess, man. And it's not banknotes. It's bank reserves. A bank note could be like a US dollar. I think you're thinking bank reserves, and bank reserves have very limited use. They really just sit on a balance sheet. It's like a marker. Like I got a marker at the casino. It's kind of like what the Fed does, which is very weird because it's not real money. It'd be different if the Fed was doing a kind of reverse repo, and then the Fed's trying to wind down reverse repo anyway. But like it would be different if the Fed was trading US dollars for these assets, but it is not. So that whole QE thing is bullshit. So that's one of the tools. And the only other tool is moving interest rates, which again is like an airplane that's flying into a wall, clicking on the blinker. They're not changing course. They're just clicking the blinker to signal what might be an intention. Like, are you going to move? Are you guys going to turn the plane? No, we put on the blinker. See, we have on the blinker. Everything's fine. You're like, oh God. So the tools that these central banks have, the tools are ineffective. What is in the short term effective is actual transfer payments to people and companies. If you give companies money and you give people money and you extend free flowing cash and credit availability, things change. But you have to be careful because if you do that, you should expect momentary supply challenges like the COVID situation, the supply shortages, that supply shock leading into this kind of short-term inflationary, perceptive inflationary spikes, but not the long-term pervasive, always and everywhere phenomenon, right? So you realize, oh, that's not really inflation at all. That's just a supply shock working its way out like an inchworm, kind of working its way out. So transfer payments are the same thing. If you do real stimulus, not bullshit QE, but actual stimulus that goes to people's pockets, they tend to, well, a lot of people game the system, but if it was done correctly and that money hit exactly the people, the pockets it needed to hit and grease the wheels of the areas in the economy it needed to grease, which is why central bank digital assets, where there's real central banks, in our case, it would be a treasury digital asset, a treasury digital dollar, a US issued stablecoin that could, where you could do targeted stimulus to specific people in specific situations and specific industries, and you could put time constraints on it. Like let's say there's a flood, you know who was involved, who the recipients of aid, and you could just go pew, 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 pew. You could send all that aid money out instantly to their accounts to help them right now. You could go grease the wheels of the local economy very specifically and very strategically with records so that when people cheat, you immediately know and you can lock their fucking ass up. So all these things could be possible with blockchain-based, ledger-based US dollar transfer payments. That we're not there yet. That would be a good thing. That would be real quantitative easy. Well, it would be real stimulus. It would be targeted stimulus. Another thing you can do is with crypto-based stimulus, well, let's not say crypto. Let's say blockchain-based US dollar stimulus payments. You could put time constraints. You could say, hey, here's X amount of money that can only be used for this purpose for the next 2 weeks. And then you could make that money dead. The money could die in their account if it's not used for that. Does that make sense? You can make it where it's not tradable. You can make it where it's not redeemable. The only transferability would be like, let's say like the used car market. Hey, we got to pump the used car market here in this particular area where the economy is getting crushed, and particularly these industries. So let's focus on used cars. Okay, over the next 72 hours, everybody here has $2,500 that they can use to go offset the price of a used car. We're also going to give a matching amount of $2,500 to participating dealerships so they can discount the cars by $2,500 if they want or whatever. And you guys meet together and make a deal. If at the end of 72 hours that money's not been placed, it expires. It's worthless. It's gone. It doesn't exist. So you could do that kind of stuff. That's what the future probably looks like. And a lot of that would probably be managed by systems much more intelligent than us, certainly much more intelligent than Big Ear Jerome Powell. So, I mean, us in the crypto space, we're in the right place. We're probably right and early. So yeah, unfortunately, no, that's a long-winded answer to your question, Chris. Mostly no. And yeah, I like Lynn Alden, although she or he, I don't know if it's a guy or not. I heard it was like a guy. I don't know. Anyway, Lynn Alden. Really, really intelligent. But she also believes the Fed myth a little bit. You can see it in the way she writes. So I don't know, man. Yeah, I don't know. You got to be careful. You got to you just got to be careful. You got to read a lot. Just read a lot of stuff. Don't take any one source, me included. Don't take any one source. Yeah. So let's, how bullshitty was that, man? God. Remember, that wasn't just him. I mean, that was the consortium. And I'm sure they were pushed into doing so by the Treasury. My guess is there was more. There's probably a lot more to that story that we're never going to know. Like strip mining the most liquid assets from the market. A bunch of fucking idiots. Either look, people are either idiots or they're criminals, right? It's like one or the other. Just choose. Because people are rarely both. And yes, knowledge is good. And I like listening to Lynn talk, but you have to be careful because Lynn buys into some of the bullshit, and Lynn also tends to believe. Lynn oddly believes in some of the kind of flawed Fed logic. It's real weird. It's like there's a little button that still hasn't clicked for Mr. or Mrs. Alden, whatever their preferred pronouns are. Yeah. Okay. Let's take a quick look at markets. I think there's a little baby rebound, but not much. These things take 2 or 3 days to clear out. It just kind of started yesterday, not even a full day ago. Expect this to kind of melt into Friday a little bit, and then we'll see what the weekend brings. My guess is this starts to abate late Friday, Saturday, Sunday. Things start to look a little rosier. We'll see. But let's take a look before we wrap up. Let's take a look at these markets. All right, let me get my little market page. We got our market page. All right, the Bitcoin is over 100K. Okay, and it's 100,000. Okay, all right, cool, bro. It's cool, essay. It's going to show some pretty big things. Are going to show some pretty big declines. Why? Well, because markets were doing a lot better yesterday before the big-eared ones started flapping. Of course, it's odd to me that Ethereum got beat up the way it did, but whatever. XRP got beat up pretty good. I think that's just a little bit, maybe a little bit of enthusiasm unwinding. But it held up better than some, right? Better than Doge, which Doge should be 0 cents anyway. So whoever made money on Doge, good on you. You've made money on a terrible, stupid, failed asset. Cardano's given up the ghost recently. It's down, 60? So let's look at the 7 day. Bitcoin's down 1%. Ethereum's down 8%. That's pretty significant. About 3% on XRP. That should be way more, but whatever. Doge 15%. Cardano 17%. Well, of course, because most everything that Charles says is bluster and bullshit. And people need to understand that Charles is not good for Cardano. Charles was good for Cardano. Charles is not now good for Cardano. If Charles said, I'm gone, I'm out, like I'm really out, I'm leaving the project, that thing would double in price. It would double in price that day. But we're probably never going to be that lucky. Sui held up pretty good. It's down 5 on the week and 5 on the day, but that means that basically, if it wasn't for today, it would probably be like down a half point. Uniswap down 20 on the week. Aptos down 10 but Aptos, man, this thing goes up and down fast and violently. It's very, although I don't advocate it, it's very tradable. It's mostly predictable again for now, right? VeChain down but not out. It's down 20%, but after it's made a pretty good run. Monero we don't really care about. Fetch shitting the bed by 25%. Why? Because it's a worthless project. It's a worthless token for a worthless consortium of companies. That none of them in the entire group have a single fucking thing to offer anybody. There is no product there. There is no nothing there. It's become an accounting monster where it just imbibes small, useless companies and their currencies, but not the companies. The companies don't merge, just the currencies. It buys sloppy bullshit AI currencies into its mix so that founders and other people can exit and you won't notice it. That's what it is. It's a chop shop. It's a chop shop. And they've gotten away with it, and people can, oddly enough, continue to buy it up. So I'm sure in 6 weeks from now, it'll be over $2 again because dummy's gonna dummy. Filecoin down 20. That's a bigger hit than I would have expected. But the further you get out on the curve, it's like the risk curve, right? Like the further you get down the list, the further you get down on the risk curve. Of course, Algorand is down. Algorand is a worthless pile of garbage. It should. I'm surprised it hit 60 cents. I don't expect anything great out of it ever. Cosmos got beat up a little bit, but it was on kind of a high. It's done pretty good. Still not on a yearly high. It's still getting beat up. Optimism. Surprised Optimism took the hit that it did, especially since there's so much going on. So much layer 2 action going on the op stack. So I think that's oversold. I mean, a lot of stuff's oversold. When you're getting beat up, you sell everything, right? But 209, I mean, this is some, look at Optimism just specifically. Look at where this was like 5 days ago. Look at the 7-day. 250, 260, 265. It's 209. Look at the 30-day. It was up in the 260s, 270s. Then it dipped back to what? 209, 208, 209. Here we are again. Curious to see how this one plays out. I would be looking at it. I will be looking at it. I think I bought some at 235. Yeah. 235 and 240 because I had 2 orders. Split the difference. 237 and a half. I bought it 237 and a half. I would probably be re-entertaining adding if it got anywhere near $2. But that's just me. You do you. What else looks interesting? I mean, everything's just kind of getting beat up, kind of summarily beat up. The bridge didn't do so bad. I mean, no one's buying it, no one's using it, but on the other side of it, apparently not too many people are selling it either. Hypercycle got beat up. Why? Because a couple of Singularity Net wallets, part of the group that was kicked out of amicably parted ways with Hypercycle. They started dumping tokens yesterday. I think 3 million, and they were dumping tokens the day before. So they've just been dumping tokens. They're going to feel real stupid in 6 days. But that's on them. More power to you. Sell all your shit. Everybody at Singularity Net, sell all your shit and get on down the road. Clear the path so the adults can get back to business. We didn't want you. We paid you off to leave. You're gone. See you later. Bye. All right. And then, yeah, that's it. Oh, well. Oh, look at this very natural and and very realistic price action. Here. Doesn't that look natural to everyone here? Doesn't that look just completely natural and realistic? Get the fuck out of here. What a joke. Anyway, here, where's that coming from? Let's see. Where is it? A little bit, the BNB side. Yeah, not really. That's a bunch of bullshit. Look at this. What a bunch of rocks. Oh, but that's natural behavior. Yeah. There's nothing to see here. Nothing weird at all. Nothing to see here. Yeah. Well, the who cares matters, because if they're pulling a scam, it matters, because what happens is when you see the price going up like this, somebody's on the other side of that. Somebody's buying that. So while somebody's buying that, people that don't know any better are getting caught up in that. That's not healthy, bro. You got to understand that, Howard. That is not healthy behavior. So, yeah, just saying. Yes, I agree. We're trying to get out of the profit, but I don't want to get out of any asset on the neck of some fool. Like, I don't feel good about that either. Like, I don't want to profit at someone else's expense, you know? Anyway, I think we can all win. My final words are, we can all win. We're still here really early, and take some time to make sure you're not over emotionally invested in stuff. Because I think a lot of people get depressed when prices go down, and they just shouldn't. If you're not emotionally invested in stuff, you don't care. Just invest in quality. Markets come back. Do you think the bull market's over as of yesterday because of Jerome Powell's 1-minute statement? No, nothing's changed. Nothing fundamentally has changed. So the prices you saw 5 days ago, they shall return. Even the shitty ones like Algorand. Those two, they too shall return. This too shall pass. So keep that in mind. Relax. Chillax, bro. Chillax. Stay in school. Don't do drugs. Don't do anything. My poor and solid drunk. Straight up meth grandmother wouldn't do. There's very little. And we will see you on the morrow.
Terrified, wandering mind, the seams have come undone. You've been telling lies to these eyes as if they'd never seen the sun. Now you've let your guard down and your heart is exposed. Now you've let your guard down, but how could you have known that I'm the big fish round here? You're a small fish. I could make you disappear. You should know this. I'm the big fish round here. You're a small fish.